What's up, everybody? This is Casey Buckner with the Buckner Group, coming back to you live or recorded. Wait up, redo that. Okay, that's fine. What's up, everybody? This is Casey Buckner with the Buckner Group, coming at you with another Whiteboard Wednesday. So today we are talking about government loans. So when you go to purchase a house, there's different loan options, and it's very important that you know what options are out there. A lot of people don't have cash to buy a house. That's obviously option number one, having a cash sale. Maybe if you sold your house and you want to use all that cash to buy another one, if you're downsizing, you can always do that. And then a conventional loan, which everybody knows about, and it's a common misperception that to buy a house, you have to put 20% down. So if you're buying a $100,000 house, that's $20,000. Well, statistically, most people don't have $20,000 in their bank account. Not even true for conventional loans. There's actually other conventional loan programs that you don't have to put that much down. You can put as little as 5% down. But there's also government loans, and a lot of these will be offered, at your mortgage company. Talk to your local lender and ask them more about these loans. We're going to go over 3 of them real quick. So the first one is USDA, and that is, let's see if I can say the word rural. How do you say it? Rural, I think that's how you spell it. Rural, yeah. Anyways, rural. So that is an area that is deemed, it goes by population. If it has under a certain amount of population, then you can be approved for, or that area is approved for a USDA loan. Real simple. You don't have to know the area. You just ask your agent and ask your mortgage broker, and they will look up and see if it qualifies. Cool thing about these is the government's giving incentive to have more people move to these areas. Something like farmland, things like that. A lot of times it is 0% down that you have to put down on the house. Huge thing. Now you will pay a little bit more in your interest rate. Usually that will go up a little bit more, but not always the case. But that is a 0% down, if you don't have the cash in hand and you're buying out, in a smaller town, smaller area, then USDA may be the one for you. We'll do this one first. VA. So that is obviously there you go, for veterans. So it's a veteran called the VA loan. Certain processes, it actually can even be extended to spouses of veterans or deceased veterans with certain circumstances. If you yourself are a veteran, again, it's going to have certain qualifications as far as credit score and things like that, like any other type of loan. But that is also a 0% down. All these will have price limits. Like you can't buy $1 million house putting 0% down. So you will have some different variations, but if you're a veteran, very important, check into a VA, even if you think you may not be qualified. Easy. Talk to us. We'll get you hooked up with a lender. Couple questions, couple steps. They'll tell you how to see if you get approved. It's pretty easy. There's just a certain number that they're looking for. If you have that number, then you qualify for a VA loan. So definitely if you're a veteran, check that one out. Let's see my colors here. And the last most common one, guess you can read that, an FHA. That's that, yeah. And you can read that. So an FHA is one of the most common loans if you don't go conventional, and usually that's because your debt to income is too far off. Like, debt to income, I guess I'll go into it real quick, but if you make $100 a month, but you owe $60 a month, then your debt to income is too far off. They want normally in the 30 to low 40% debt to income to make sure you can afford an FHA loan. Again, a loan person, talk to us about your more specific situation and we can get you those numbers, but it has to do with debt to income and a lot of times credit score. So with a conventional loan, they want a higher credit score, high 600s, really 700s, 800s if it's there. That's a conventional loan. FHA is if your loan, you don't have as many lines of credit opened up. all kind of different variations, first-time home buyers, all kind of different variations that FHA does. And the great thing right here is it's only 3.5% down, which is huge. So again, $100,000, instead of putting 20 grand down, you put 3,500 down. That's a huge game changer for a lot of people being able to put that down. There's also all kind of cool programs about getting family, your direct family, to actually help you with some of that money. They can actually give money. But again, we can get into that more. Call us. We'll get you hooked up with a lender to go more. But kind of wanted to go over, you're not just stuck to a conventional 20% down. There's conventional 5% down. And then there's also these government loans, if you're looking in a rural area, if you're a veteran, and then the most common type, an FHA loan. Again, certain qualifications and things may apply, but wanted to make sure you knew that you have options if you're looking to buy a house. So that's this week's Whiteboard Wednesday, and hope you all have a great week.